Banks are cautious in lending at this time that interest rates are relatively high because the higher the interest rate, the higher the likelihood of default. But if you are badly in need of a loan facility from a financial institution, this is where a good credit report from any of the Credit Reference Bureau agencies can be your savior.
Banks are in the business of lending, and refusing to lend funds to those who need it will hurt the banks themselves. So, they will have to lend. But when the interest rates are high, as we gradually have it, they are careful who to lend to in order to minimize the default rate. But this is where credit referencing comes in. George Ahiafo is the CEO of XDS Data, one of the 3 agencies in Ghana.
No bank can survive without giving out loans. The bank takes a loan deposit from you, they lend it to somebody, and then they have the spread. So the current condition really is dire. It affects the amount of money that the companies and the people need to take care of their business. It is even more important now for you to actually look at the person's credit background before you give out the loan.
Mr. George Ahiafo says the practice where financial institutions deny loan applications because rates are high is inappropriate. He says banks should rather rely on customer credit reports to price their loans.
In the current times, the banks are shying away from giving out credit because they feel they think that because of the hardship, people won't be able to pay, their ability to pay. This is the time that we can give you the courage, the encouragement that, okay, this person is trustworthy, he's taken a facility before, and he's paid on time and stuff like that. So you can have the confidence to give them the loan. So you shouldn't pull back. If you pull back, you're going to be sitting on a liability.
Institutions use credit reports to structure loans that grants to customers. It will force many people to pay their loans in order to have a good credit report.